pretty lackluster day that we saw on the markets in terms of activity yesterday. Today, higher commodity prices really pushing up those resource counters. A sustainable momentum that we're seeing in that space in your books?
As I was saying, a little bit difficult to tell at the moment, Alishia. There's still a lot of uncertainty with European sovereign debt. There's also problems in Japan whether whether they can sustain their industrial input and increase that industrial input from their side. So still a lot of uncertainty, but I think that the general miners are looking relatively well priced, and with a weaker dollar going forward, commodity prices will be much firmer. So looking positive. I think that you'd have to see one or two more positive news statements coming out and economic data coming out of the States to see if this is going to be sustained or not, though.
Yeah, of course, a lot of this, as you're saying, hinging on that global economic growth story. And while we have the EU sovereign debt issues looking slightly subdued for now, on the bond side, we've seen American yields coming down on the 10-year Treasury yield. That's sitting at 3.02%. German yields have come down. African yields have been following as well. And that despite comments of inflationary pressures and a possible sign that we could well see a slowing down in the pace of growth moving forward.
Yes, those long-term bonds at 10-year Treasury all the way down, as you said, to 3.02%. If it breaks that level, it's got even more downside. And what that is telling us is that they're expecting a weak economy in the United States going forward. That could also lead to a QE3, and we'll have to take a look if that's going to happen, because inflation relatively benign in many parts of the world. A problem in China, a problem in India, but Western economies still managing to keep inflation relatively stable. So the long-term Treasury bonds showing us that economies are not looking as strong as they should be, and possibly a QE3 coming on it by the end of June.
Just taking a look at some of the economic data that's filtered through on home ground specifically, we've seen that private sector credit extension number coming in better than expected at 6.18%, where forecasts had anticipated 5.6%. So that's surprising to the upside. What's your view on the numbers there? How much do we read into it?
Well, it's coming off such a low base, Alishia, so it's positive that it's going forward, but it has come off a very low base, and it's moving very slowly upward. It's moving in the right direction, but we really need that to be slightly more aggressive. We need the banks to give a little bit more credit. Banks are slowly trying to get rid of those bad debts which have been quite sticky on their books, and slowly they're starting to release a bit more credit into the market, but we'd like to see this pace of that a little bit quicker in the economy.
Of course, because this comes hand in hand with the fact that we've seen money supply come in lower, and that's surprising as well.
Yes, it is quite surprising as you see that credit numbers go up and money supply come down at the same time. It's a little bit worrying. It shows you that spending on infrastructure, etc., maybe is a little bit slow, and the need for money is not as great, as there's still a lot of savings going into the market. So a lot of saving going into the market, and that money extension a bit slow. So it's a little bit worrying from the South African side of.
Of course, coupled with those two figures, GDP numbers coming in for the first quarter of 4.8% quarter-on-quarter growth that's filtered through there. Has the data today made any difference to your interest rate expectations moving forward?
No, I don't think so. I think that we saw manufacturing do really good. It was up about 14.7%, but the construction was 0% on that GDP growth. So it's still showing you that it's money being spent in the economy and on infrastructure on the construction side is very weak, and the construction company is really battling there. And I don't think we'll see an increase before the end of the year. There's a call maybe by the end of the year if inflation is really aggressive in China and India, but otherwise we only see an increase in interest rates in the first quarter of 2012.
Well, talking about construction, we've got Murray and Roberts firmly in the spotlight today, that with the rebalancing of the MSCI index taking place at the close today, and with Murray and Roberts expecting to be deleted off that indice list. What have you made of that move? Because where you would expect to see some pressure on that Murray and Roberts share price, it's holding pretty firm today.
Yes, I think Murray Roberts is really trading really at its lowest levels in many years, and I think that a lot of people are already out, a lot of the funds are out of Murray and Roberts, and I think that by them moving out of the MCI there'll be a little bit of adjustments of portfolios, but I think a lot of people have already taken a lot of money out of Murray and Roberts, so a slight reweighting over the next few days, and maybe we'll see weakness over the next few days once it deletes as it comes out. It'll take a few days to rebalance those portfolios, but I don't think it'll be a very big dip for Murray and Roberts. There's not a lot of holdings left in Murray's from the big pension funds, etc.
Of course, stepping into that index is, a company that has exposure to the construction space, but also a little bit more diversified in that it has exposure to the mining sector as well, and that being Barloworld. What's your view on that company? Because we did see good results released roughly 2 weeks ago from this company.
Yeah, it's a very good set of results from Barloworld. The yellow metals are doing extremely well all over the world except in the Iberia Peninsula. Otherwise, very strong everywhere else. South Africa, Europe, Asia as well, looking very solid. So I think it's good that they're back in that index. If you take a view on mining and commodities going forward, and you see the mining and commodities still growing over the next few years, I think you have to be in Barloworld. It will follow with the mining companies. So looking very good, and good that they're back in the index.
And what about a player like Life Healthcare? Because that's also a player that's going to be added onto that indice.
Yes, so they generate a lot of cash flow and a lot of annuity income, Life Healthcare. They've got a good set of businesses, and they're looking to expand into Africa as well. So a new listing on the exchange over the last year, but looking very good, and something that you would want to put in your portfolio.
Of course, this is a company that has had a good run already. I mean, we've got it trading flat today. How much more upside potential do you see on that share price?
I think if you take it on a very short-term basis, there's probably only 25 cents in it back to 17 Rand, but on a long-term view, they should be paying good dividends with the amount of money that they're bringing in on the cash flow basis. Dividends should be good going forward, and longer term it's looking very good, and I think you would definitely have it in a long-term portfolio. You can probably wait a little bit on the short term, but if you're looking long-term, definitely something to hold, Alishia.
Of course, we've got markets keenly tuned to the decision out of the Competition Tribunal later today. That Massmart Walmart deal in full focus. What effect do you see this having not only on that individual share price movement, but on the market as a whole, Rob?
Yes, I think if that deal doesn't go through, there'll be a lot of pressure on the Massmart share price. I think there's a lot of funds holding stocks waiting for that to go through, and I think it's also been held up when a lot of the other companies in the retail sector have come down. That's held up because of this deal. So I think if it doesn't go through, there'll be a lot of pressure on Massmart, but it's a long-term effect in the South African market that we're waiting for. If that deal does not go through, it shows that it's very difficult to do business in South Africa, and you'll see some of the other retailers maybe in the short term bounce because of the threat of Massmart being away, but long term it would be quite negative for South Africa. So there'll be a lot of pricing, a lot of movement when that number comes out at 2 o'clock, that announcement comes out at 2 o'clock. So we're definitely waiting for that. Hopefully it's positive, and it will be good for South Africa.